Good morning, students. So, last class, we have discussed about the national income, flows and stocks, and in the flows and stock, the income flow and real flows. Out of the income flow or money flow, we have discussed about the circular flow of income or circular flow of money or circular flow of cash, whatever it may be. The circular flow is consisting of two sector model, two sector with savings, three sector model and a four sector model. So the notes part, we have to take up the notes part. And after completing the notes part, I want to introduce a new concept called GDP, GNP and all those things. So in national income, there is a very probability that I already told you from the MCQ, preliminary examination point of view, you can expect questions in the two sector, savings and three and four sector model. From the mains point of view, they may ask you a sub question saying that, please evaluate the concept of flows. So in that, when you are talking about the concept of flows, so you have to define what is the meaning of flow. Then you have to briefly explain in every paragraph what is the two sector, what is two sector with savings, three sector and four sector. So out of the given answer sheet to you, at one side of the, that means within 13 to 15 lines, you have to explain all the models. That means for every model, you will have 2 to 3 lines to write. Then we will move to the GDP, GNP and the other areas of the national income, right? So first today I will introduce the concept, then we will go to the notes part. The next part of the concepts is the basic concepts of national income. First we will discuss about the GDP. Even you know that GDP is nothing but gross domestic product, Sthula Deshiya Utpatti. In Telugu we call Sthula Deshiya Utpatti. Right. From this GDP, what I am going to do is, I will subtract the depreciation. When I am subtracting the depreciation from the GDP, the value what I am going to get is nothing but NDP, net domestic product. From gross value, if you subtract depreciation, the remaining balance is called a net. Okay, after your group 1, when you get in the job, you have the gross salary. From your gross salary, certain statutory cuttings will be there in the name of provident fund, maybe the pension contribution, maybe the insurance, maybe the profession tax. So of cutting all these things, what you are going to get? Net salary. So if you have the gross and subtract something from the gross value, the balance is nothing but a net. So NDP, the very popular question, how to get the value of NDP? Very simple formula. How to get the value of NDP? GDP minus depreciation is nothing but the NDP. Question number 2. What is the difference between the GDP and NDP? What makes the difference between GDP and NDP? The difference part is called as a depreciation. I will explain all the concepts too. Right. From this GDP, I am going to add net factor income from abroad, NFIA, or in some books you find NFA, net factor income, NFI. So net factor incomes from abroad, then the value I am going to get is a GNP, or I can say GNI. I can use the word GNP or I can use the word GNI, gross nation income. From this gross nation income, I am going to subtract the depreciation again, because the gross is the value which is not available for your disposal. Your gross salary may be after group 1, your gross salary is 1 lakh, but you are not in a position to dispose the entire 1 lakh. Even out of the 1 lakh in your hand, the net salary is hardly maybe around 85 or 84,000. So you are in a position to dispose the net only. That's why from the national income point of view, we always talk about the net value. So the net value is nothing but NNP, otherwise I can use a word NNI, net nation income. So from this net nation income, I am going to divide it, net nation income. I am going to divide it with the population, then you are going to get the concept called per capita income. Okay, so this is the flow of the topic national income. After learning the 2 sector, 3 sector, 4 sector models, then we are landing in this particular area. This is the flow diagram. If you are good in this flow diagram, so 50% of your work is done. Here, what you have to understand, how to get the PCA value. How to get the PCA value? Take the NNP, divide it with the population, then you are going to get the per capita income. How to get the value of NNI? So NNI is equal to GNP minus depreciation. GNP minus depreciation. How to get the value of GNP? GNP is how to get the value? GDP plus NFIA is nothing but a GNI or GNP. Okay, so you take any standard textbooks, you won't find this kind of simplest flow. They will try to create confusion as much as they want. It's nothing but a simple flow diagram, how to arrive the values. So once you are good enough to understand this particular flow, then rest of things is only conceptual part, that's it. Right? So I have given a lot of variables here. Variables mean always subjected to change. So a lot of variables are here. Out of this one, which variable you are going to call it as a national income? Our heading is national income, topic heading, syllabus given national income. No? So out of these given variables, which one is your label as it as a national income? NNP or NNI or GNP or GNI, what is exactly? So national income is nothing but the NNP or NNI, net nation product or net nation income. Technically, this is what the national income means. But straight away, I can't arrive this value, NNP. To arrive this NNP, I need to GNP. Even straight away, I can't arrive GNP. To calculate the GNP, again, I have to depend on which variable? GDP. That's why I'm doing all these exercises. The ultimate aim of the calculation is to measure the per capita income, so that according to the per capita income, I can assess your standard of living, I can assess your quality of life, I can assess the economic progress of your particular state or maybe the district or maybe the country. In today, Telangana is occupying the first place in terms of per capita income in relation to South Indian states. In relation to South India, this is the first year. Okay, in today, South India, the least per capita income is Andhra Pradesh. The same time, in South India, the highest per capita income is Telangana. So, Telangana has crossed with Karnataka and Tamil Nadu. Tamil Nadu, Karnataka, one is a silicon state, one is the manufacturing state. But we are in a position, we are dominating. That's why our KCR always tells that Telangana is a Bangaru Telangana. Now, the words are proving correct. It's a golden Telangana. Yes, the words are proving correct now. In terms of per capita income, we are almost all dominating we are competing with the states like Gujarat. Right? So by getting the per capita income, I want to know your economic standards or your economic growth, but I can't get directly the value of per capita income. So for that, I required an NP. So this is the net nation income, right? And GNP, state in countries, national income, GNP, and this is the factors. Out of all variables, the first variable or the basic primary variable is nothing but the GDP. So this, I call it a starting point. Unless you don't have the starting point, GDP, you can't compute the other variables. You can't compute. So this is the primary for us. So first we have to learn the GDP, then we have, I'll explain what is the NFIA, what is the depreciation, all those things, we'll come to discuss, no need to worry. So first you try to understand the particular flow. Once you are good enough in the flow, so how to calculate which variable is depending upon which variable, then I told you, there is absolutely no confusion. Rest of the thing what we have to do, we have to take piece by piece each and every variable here, and I will try to explain the concept and how they are going to value the concepts, that's it. Clear? So GDP, NFI, net factor incomes from abroad, and GNP, depreciation, NNP, and per capita income. So this is the flow. Now, using this flow, first I will try to explain the meaning of GDP, then I will try to explain the meaning of GNP or GNI. In parallel, I will try to explain both the concepts so that you can find out the difference between the GDP, gross domestic product, Stula Desiya Utpatti, gross nation product, Stula Jatiya Utpatti. Okay, so then you'll come to know what is the difference between the GDP and the GNP. Now first I will take up the GDP, gross domestic product. Domestic product. Gross domestic product. GDP. Gross domestic product, the simplest definition is take one particular financial year. Already we have completed the concept of the financial year. What is India's first financial year? Starting from 1st April to 31st March, 1866, 1867. Dadabai Noroji, we have written the notes also. So 1866 to 1867, that is the first financial year of the India, which was started with the 1st April to 31st March. Afterwards, okay, we are still continuing the same legacy over a period of 150 plus years now. A number of times there was a demand to change the financial year and to make it equal to the calendar year. Even the Modi government also, they tried to change the years, but because of certain administrative and software related issues, lot of expenditure involved in changing the financial year, lot of acts has to be amended, number of acts has to be amended. So keeping all these things into the consideration, okay, we decided not to go for a change in the financial year. Still we are having the financial year 1st April to 31st March. So take one financial year. In the respect to financial year, you try to calculate the value of all the final goods and services. Goods and services. So in relation to a particular financial year, try to arrive the value of all final goods and services in terms of money. Because when you are talking about the value, obviously it will be in terms of the monetary terms. So in terms of all financial goods and services, which were manufactured or which were produced, which were rendered domestically in a particular geographical area. So what the domestic means, I am defining particular geographical area. In that particular geographical area, how much volume of goods and services we are able to produce. So from Telangana point of view, the geography of Telangana means we have the district map is there. So the physical boundary of Telangana is there. Similarly, in India also, we have the physical boundary of the India. So I am taking the physical boundary of the physical map of our physical boundary of the India, which is directly under the control of the government of India. So in that particular area, there is nothing but India map you can take. So you take the physical geographical extent of the India, so called this is the India. So in this India, how many goods, I am not talking about the goods, but I am putting a word called final goods. What makes a difference between good and final goods? Okay, goods is a tangible form, physical form, which satisfy your needs. Final goods, which is ready for consumption and available in the market for sale. Okay, that makes the difference between the good and final good. In a national income, we are not talking about the good, we are always talking about the final goods and services. Okay, so for example, a doctor is there. Doctor's mother is not well. Then what doctor did? He took up an injection and is given a medication to her mother. Is it service or not? Yes. Is it final service or not? See, like same. Please try to follow the example. Doctor వాళ్ళ అమ్మకి ఇంజెక్షన్ ఇచ్చాడు. Is it service సేవ కిందకు వస్తుందా రాదా? Yes, service. Is it final service or not? No. Any service which is available in the market with the intention to make profit. The intention should be there to make the profit. Then in such case, we call it as a final services. Right? You have in your home, you have coconut trees there. You started reading the economy, tree unable to understand, then suddenly 2 coconuts fell down. 2 కొబ్బరికాయలు కింద పడ్డాయి. తీసుకున్నారు, తాగేశారు. Is it good or not? Physical form, quantifiable, satisfying your needs. Yes or no? Yes. Is it final goods or not?